Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with EverAg are their own and do not reflect the views of EverAg. The accuracy of their statements cannot be guaranteed by EverAg.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a lovely Thursday morning. Joining me today from Iowa, grain marketing advisor, Ms. Kristin Stien. And joining us for the first time from Nebraska, President of Brugler Marketing and Management, Mr. Alan Brugler. Team, how are we today?
Doing good, Jimbo, and you?
Dude, I'm doing great. We have a great crew. Alan, welcome aboard.
It's my pleasure to be here. Interesting markets, interesting day.
Interesting markets, interesting day. And maybe it could get a bit more interesting depending on what happens with tomorrow's WASDE report, but we'll get to her in a minute. Kristin, how are things west of the Big River?
They're looking good. I mean, to Alan's point, I have yet to find a marketing year that's not interesting.
Right.
So that word gets thrown around a lot, but we're definitely in it again all over this year.
That's
so
right. It's just interesting in different ways. That's all.
Yeah, exactly.
In different ways. All right, before we timestamp this broadcast and run through the markets real quick, Alan, would you mind introducing yourself to the viewers here for a moment?
Sure, I'd be happy to. I'm Alan Brugler. I'm the president of Brugler Marketing and Management LLC. I started my career 15 years as a marketing education analyst for Ohio Farm Bureau Federation. DTN hired me away from Farm Bureau. I was the senior analyst at DTN for 10 years. I wrote about 10,000 columns for the DTN box in that time period. Went private in 2002 with Brugler Marketing Management and been doing that ever since. We've got clients in about 15 states, mostly commercial scale farmers, a few large companies as well. Our specialty, if you will, is kind of the more technical, more detailed look at the markets. We do a lot of proprietary products like price and probability forecasts and techno-fundamental forecasts. Give producers who don't want to spend every moment looking at the market a framework of how low can they think things could go in this 2 or 3 month period. How high can I expect they might go?
Beautiful. Yeah, that's the name of the game this summer is how low can things go? We'll try and determine that here in a minute. But first, Paige, if you would kindly timestamp the broadcast. It is Thursday morning. Happy 7-Eleven, July 11th. I heard earlier from Corey, are there free Slurpees being handed out? Kristin, can you go to 7-Eleven? Is there one in town?
I don't even know where one would be around this area. I would have to travel a little bit of ways.
Why don't you come on over? We got plenty of 7-Eleven.
We're Casey's over here. We focus on pizza from the gas stations.
Well, you should just tell everyone it's free Slurpee Day or whatever variation of slushies and Slurpees they have.
From what I hear, it's better to buy ice cream on hot days like this anyways.
Amen. 100% better. That's right. Support the dairy industry. Buy ice cream. Ask 7-Eleven for that free ice cream on 7-Eleven Day. About 11 o'clock Thursday, so we're about 24 hours until the July WASDE report. So that's being released on Friday the 12th at 11 a.m. Chicago time. I don't know if I say 12th. Do I say 12th weird, Kristin?
12th. There's no F in there.
No F. Well, maybe there is now. I don't know. But let's just look at the markets real quick. We do have the corn market bouncing just a touch today. So perhaps maybe managed money is maybe just doing a slight little repositioning ahead of that report. But we have December corn futures are up about 3 cents, just a little over 4.10 as we trade this morning. We have December wheat back at $6, just about even. We have Novi beans at 10.67. That's roughly unchanged on the day. And then December meal, that not as stubborn little byproduct. We're down to 3.14 on December meal. That's down about $2 per ton on the day, representing the dairy farmers. We've been very pleased to see those protein futures continue to grind their way lower. So nice to see December meal not as stubborn of a little byproduct these days. So happy to see that. Let's turn it back over to Mr. Alan Brugler. Alan, there's been a lot going on. As you said, we're in the business of trying to determine just how low things can go, but maybe just how high things can ultimately recover through the summer. So Alan, what have you been seeing lately here in this wonderful summer of 2024?
Well, there's a lot of moving parts. I think the dominant stories here, the market's trying to buy export business. I say the market, I'm talking corn and beans here. You've got to remember South America is about 50-60% harvested on their second crop corn in Brazil. That's hitting the world market. U.S. corn didn't get quite the sales in the third quarter that we were hoping for. We had about roughly between 700 and 750 million bushels. We'd preferred 800, 8.25. We got a little catching up to do, and we're going into the teeth of their harvest. So old crop corn's been under pressure trying to buy some market share. New crop, I think the story is tomorrow. USDA is going to have to raise their acreage estimate tomorrow. They're probably not going to cut their yield estimate because crop condition ratings are still running above the 10-year average right now. So the market's been discounting that. You mentioned the fund positioning. They actually have a near record short position in corn. Last week, it was over 330,000 contracts. That's a very large short. That's 1.8 billion bushels short. So they're all over this thing of, hey, you got to go lower to get more consumption. Are we too far sold? Possibly. I think you've got some pretty good technical support there. Well, definitely in the 380s and even round number support around $4 there on the nearby corn. December, we think, is in the bottom 20% of our expected price range given our S&Ds. These are fairly cheap prices. I think over the next year they could go lower simply because where we are in the long-term cycle. Switching over to the bean side of things, beans got hammered earlier this week. The products have been the reason. And, as a meal consumer, that's a good thing. As a crusher, it's not so good. What we know is the farmer has very few old crop beans left. He's sitting on quite a bit of old crop corn. The industry doesn't own very much of either. The commercial fund position is actually net long, meaning the crushers have more longs on than the elevators have shorts. South America is flooding the world market with bean exports. We're a couple months after their main harvest. So again, the U.S. is trying to get down there and get some beans bought by the world. I would definitely want to point out that China, up until this week, had purchased no new crop soybeans from the United States. They did announce a sale yesterday. There may have been a couple of smaller optional origin sales or unknown destination sales earlier, but basically they've been sitting there saying, we don't want any. We got enough out of South America. Their internal prices in China, Dalian futures, are at multi-year lows. In fact, they're $11 a bushel lower than they were at the 2022 high. It's hard for us to get a bean rally going when China's internal prices are low and they've got a lot of supply out of South America. I do think we're a little oversold here. We can get some chart bounces and probably will. I'll leave it at that.
Yeah, I think we're at a stage, Alan, where you nailed it, right? We've been grinding this thing so low, one would think maybe it's a matter of time before someone finally steps in. China, I think we were all made note of it this week when we caught that flash sale because it's the first one we've seen. And so we all made note of that news. Yeah, I mean, the old saying, right, the cure for low prices is low prices. We get down to a certain stage and maybe it's just a hedge on China's part in terms of stepping in at ultra low futures pricing and saying, hey, boards come down this far. Let's at least step in and on paper, we'll own some U.S. beans with, of course, we know they can always cancel those shipments as they push into the springtime, at least our springtime. The South Americans, yeah, they're back online. I mean, the Argentines had a couple pretty rough years down there, right, in terms of adverse weather and drought conditions, but they appear to have replenished that bean crop. They're crushing beans. They're shipping exports. I mean, that adds to the protein availability nationwide and globally. So it's been an interesting run, right? We've seen, like you said, Alan, for the dairy farmer, we've been ecstatic to see these protein prices come down. For the soybean crusher, not as much. I mean, do you think that the soybean crush pace ultimately slows a bit? And we saw a shutdown and slowdown there through April and May. But if we were to keep protein pricing down at these lows, do you think that crush pace ultimately stays a bit slower than some of the record pace we saw, through late fall and early winter?
Well, I think you have to remember as I said, the commercials have a fairly big, long hedge position on, and that is the crusher. So they've got some margins locked in that they could continue to crush as long as they can get the beans and not have to pay through the nose on basis. Now, if you're the bean producer, you're saying the board prices dropped so much, I need a strong basis, and that could interfere with the calculation. I think the underlying thing you need to watch relative to crush is we're going to make more meal and more oil. All right. You had 2 more plants come online this year. You've got 11 more under some phase of construction. That dates back to the renewable biodiesel initiatives in 2022. And the fact we had board crush margins at almost $4 back then. That's a license to print money. Several of those plants are coming to completion end of this year, first quarter of next year. And so you're going to see more meal production, more oil production. The question is, can you absorb it? The bean oil's been under pressure because you've got a shrinkage of the subsidies. The RIN values have dropped because of the increase in production. California carb credits have dropped tremendously. 2 years ago, they were over $1. Now they're below 53 cents. And bean oil just doesn't work as a diesel replacement if it doesn't have those subsidies of various types, whether it's the California credit or the virgin oil credit from the USDA. If you don't have that, bean oil is too high. So what am I saying? You may be getting in a situation where those new plants are going to say, why'd I get into this business? The products are coming down in value. But what solves that is if beans come down in value, but that's not going to make too many producers in the Corn Belt happy.
Right. Yeah, exactly right. We've been focusing, you brought up the plants currently under construction and those that are still, at least blueprinted to be under construction over the next year, a year and a half. I mean, we focus on that pretty closely here as well and try to emphasize, at some point here, we just continue to increase our capacity to crush beans. We're going to increase the potential to supply the domestic market with protein. Again, what that ultimately does basis wise, what it does for soybeans themselves, ultimately to be determined. But like you said, in order to appease the crushers, we're going to need to see, soybean pricing continue to come under further pressure. And like we already said, we've got November beans trading sub $11. This summer appears to be an okay summer. How low do Novi beans end up going? And maybe Kristin, I can turn that over to you because we've been watching that very closely as well on your side, representing the soybean growers alongside the corn growers. What's the word on your side of things?
Yeah, we sure have. So I want to kind of take it back to what Alan was talking about when it came to the soybean crusher and the producers not going to they haven't been liking the falling market that we've seen. And so is it going to come to a place of capitulation where they either need a strong basis, or are we at a spot where we're within the next 2 months going to be starting harvest? Guys are looking out their window saying, oh, there is a crop that's going to be coming in. I need to get rid of the stuff that's in the bin right now to make room for that. So that's the part that I continue to be concerned about. We touched on the funds being super short this corn and soybean market and sitting there and saying, boy, at what point are they going to cover those shorts? They have to be given a reason to. If they stay neutral on this thing, do we still get to a point where the farmer has so much selling pressure on this thing that we continue to push lower as well? It's the debate that we continue to go back and forth on as a company. I've got all these buyers of feed going, no, we've got good prices. Finally, we're going to be hedging here. And I'm like, yeah, but how much, right? Because there's still plenty of grain producers selling that still has to happen. Right? When we talk to the amount of people that have been calling in that we haven't worked with before continues to rise. And it's, what do I do with the crop that I still haven't sold yet? And they're talking about old crop, let alone new crop on top of that. So that's my main concern from a downward pressure in the market.
Yeah. And to then ask, what are the dairy farmers doing with this break? I think some of the advice given from our side this week is, depending on what basis looks like in your part of the country, strongly consider physical ownership to a certain extent, right? You don't need to step in and grab everything on this break. It's early yet. And like Alan said earlier, we might find a seasonal pop or some support through the summer, but ultimately you could see the stars aligning for this thing to remain under pressure longer term. But yeah, at this stage, it's finally a step in and own some physical, use some of your outstanding exposure to utilize some hedges here. But yeah, is this the end of the downward momentum? I don't know.
Markets go up and markets go down. It's hard to tell, right?
That's exactly right. That's exactly right. So I guess, Kristin, in terms of the row crop producer that does still have, some old crop corn in the bin and they're watching then December futures too push, I'm assuming below most folks cost of production at this stage. What kind of is the game plan on your side as we move through the summer?
Yeah, definitely not fun times right now when you look at the sales that still need to be made, especially if you've been naked in your exposure this whole way along. And so for the guys that are in that type of position, my main suggestion is to sit there and really take a hard look, consider selling that December, or if you have storage capabilities, more of that March type contract, and then just own some calls just in case this is the bottom side of it, right? Manage your risk that way, but understand there's still plenty of downside pressure that could go from here. It's not even the middle of July, right? We still have a few more days before it is. This is a time where we're tasseling. Things seem to be going really, really well, aside from your one-off areas that either had a little bit too much rain or too much hail, or if you get over to the far East Coast, they're a little bit drier, right? But by and large, the feedback that we continue to get is things look good. So there's not a nationwide disaster happening during pollination period, which typically doesn't bode well for the markets. So understand that there's still risk to the downside. Manage that with, my suggestion is a sale and then have a cheap call ownership on top of that.
Okay. Yeah, that sounds like a good game plan to have as we push forward. And, we do have some folks this week, at least ahead of this report. And we noted at the beginning, perhaps managed money is also doing a little bit of repositioning ahead of that report. But, Alan, sometimes on the show here, we ask for some bold predictions as we head, into the report. So I won't pin you on any numbers. But if you were to say we're going to have a surprise in tomorrow's report from any part of the U.S. or global balance sheet, just a bold prediction, where does that surprise in the report come from?
Well, they say there's old traders and bold traders, but there's no old bold traders.
Love that.
I think the potential for a surprise is that everybody's assuming corn stocks numbers have got to go up because of the June 28th numbers. But USDA has a tendency to not go as far with those as you think. Okay, they have offsets. You get lower prices, you get more consumption, that type of thing. I think another potential surprise would be if they lowered the average yield estimate from the 181 on corn. That would be going against their normal practice. They're more likely to do that in August than in July. But if you're looking for a surprise, a tighter scenario on corn would be the one that would really get the market rolling, particularly given this huge short that the funds have.
Okay.
If you want to have a sell the rumor, buy the fact, that's probably your best ammunition.
Yeah, absolutely. Kristin, what about you heading into the report? Any bold predictions on what does the USDA surprise us tomorrow in this report?
So you continue to ask me on your language, like 12, what did you say? Wheat, I think was another one. And now you're saying, is it bold or bull? Because bold, sure, I still think there's plenty of downside, but bull, I'm not convinced on. Unless Alan's right, unless they come out with something surprising, maybe around South American production, since it is a WASDE report, but I don't know at that. I think usually it's to Alan's point, it's an August thing rather than a July thing. So We'll see what they bring.
Maybe it's a bold prediction for tomorrow. Well, I think, you know what, just to throw something out there is on the South American balance sheet. Does the USDA take advantage of the fact that all we're talking about are the board prices and the recent acreage report and stocks report from end of June and what our summer weather may or may not look like? And do they just sneak in and say, you know what, we were pretty behind on slashing Brazilian production numbers. We're just going to go ahead and sneak those in.
And that's the thing. People have been begging for them to do so here for how many months now? Is it finally they catch up to everybody? That might be the ticket.
So maybe they're dangling the all the U.S. talk in front of us, and then on the other side, just a sneaky little like 5 million ton.
So left click, got it. Bye.
Exactly. Yeah. Well, guys, this has been awesome, and really appreciate your insights. Huge thanks to Kristin for returning to the show. Thank you, Kristin, for being here.
You got it.
And a huge thanks to Alan for joining the show. Alan, great to have you. Great to connect with you again.
It's been too long. Have to do this again sometime.
Absolutely. That sounds good. And we would also like to thank the Everag Insights crew for their support. Thank you to Paige and Lexi for their production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feed. back. That's all for today. We'll see you next time on the Grain Feed.